I like to do this side as well when it comes to foundation. I like to keep it rolling around so you could just...
Makeup has always been a great way of self-expression for me. I just knew in my soul.
I wanted to give you guys what I really use and how I really take care of my skin. And so we are launching with 9 products.
5 celebrities, 5 beauty brands. Combined, they represent over $8 billion in announced deals, valuations, and acquisitions. And the winner is the one nobody predicted. Not Rihanna, who invented the modern celebrity beauty playbook and built Fenty Beauty into a global phenomenon. Not Kylie Jenner, who had 400 million Instagram followers and sold her brand for $600 million. Not Kim Kardashian, who built a $4 billion shapewear empire and tried to do the same thing in beauty twice. The most financially successful celebrity beauty brand in this entire story belongs to Selena Gomez, a woman with no business partner.
Hi everyone, it's Selena Gomez. I will be showing you my day-to-night look with some of my makeup.
At the scale of LVMH, no Kardashian machine behind her, and a health condition that kept her off the road for years. Rare Beauty is currently valued at $2.7 billion. Selena Gomez is now officially a billionaire. The least famous person on this scoreboard built the most valuable brand. That is not an accident. And understanding why it happened, why the rankings look completely inverse to what fame alone would predict, is the financial story of the entire celebrity beauty industry in one video.
We have cotton pads and it's round just like our moisturizer and like a bigger version of our eye cream.
We are going to run the real scoreboard. No product reviews, no tutorials, just the money. And some of the numbers are going to surprise you. The scoreboard, real numbers only. Before we go brand by brand, let's put the full picture on the table, because seeing all 5 results simultaneously is what makes the pattern visible. Rare Beauty, founded by Selena Gomez in 2020, is currently valued at $2.7 billion. It hit $540 million in sales in just 4 years. An IPO is being explored. Selena Gomez is a billionaire.
Hello Sephora, I'm Selena Gomez, the founder of Rare Beauty. Very proud, that's my baby.
Rhode, founded by Hailey Bieber in 2022, was acquired by e.l.f. Beauty in May 2025 for $1 billion. The deal was structured as $600 million in cash plus $200 million in stock at closing, with a potential $200 million earnout tied to Hailey's continued involvement. Rhode was 3 years old at the time of the acquisition. Fenty Beauty, founded by Rihanna in 2017 as a joint venture with LVMH, generated $450 million in net sales in 2024. Its peak valuation was $2.8 billion. As of October 2025, Reuters reported that LVMH is actively exploring the sale of its 50% stake. Current valuation estimates, somewhere between $1 and $2 billion. Kylie Cosmetics, founded by Kylie Jenner in 2015, was valued at approximately $1.2 billion when Coty acquired 51% for $600 million in 2019. Coty subsequently wrote off $200 million of that acquisition value. The brand is currently in an active rebrand after the phrase, "Kylie Jenner brand is a mess," began trending publicly.
I think this was another fun way to create art with some of our personal.
SKKN by Kim, founded by Kim Kardashian in 2022, was officially closed in September 2025, 3 years after launch. A makeup relaunch in 2024 failed. The brand was folded into the Skims infrastructure and quietly discontinued. That is the scoreboard. Selena Gomez, $2.7 billion. Hailey Bieber, $1 billion exit. Rihanna, declining from peak. Kylie Jenner, wrote down by her own acquirer. Kim Kardashian, shut it down entirely. The most commercially successful celebrity beauty founder in this group is the one with the least conventional path to it. And the reasons why tell you exactly what this industry actually rewards. Kylie Cosmetics, the deal that looked like a win. Let's start at the bottom of the scoreboard, because the Kylie story contains the most important lesson for everything that follows. In 2015, Kylie Jenner launched Kylie Lip Kits from her bedroom.
All black.
Very goth vibes.
Goth vibes, October vibes.
Or at least that was the story. In reality, she had manufacturing and distribution infrastructure from day one, facilitated by Seed Beauty, a private label cosmetics manufacturer that handled the operational side. Kylie provided the audience, the social media presence, and the personal brand. The model worked spectacularly in the short term. Lip kit sold out within minutes of launch. The hype was genuine and enormous. By 2019, Forbes was calling her a self-made billionaire, a claim that generated significant controversy but pointed to one real truth. The brand was generating extraordinary revenue numbers on the back of Kylie Jenner's social media following. In 2019, Coty paid $600 million for 51% of Kylie Cosmetics, valuing the entire brand at approximately $1.2 billion. It looked like a perfect exit. Kylie got the cash, she retained a stake, the brand had institutional backing. And then the real numbers arrived.
Brand new, updated makeup tutorial. I know I've done a few of these in the past.
Post-acquisition performance could not sustain the valuation. Coty wrote off $200 million of the acquisition value, a public accounting admission that the brand they had paid to own was worth significantly less than what they believed at the time of purchase. That is not a routine accounting adjustment. That is an institution admitting that the projected revenue and growth trajectory that justified the purchase price did not materialize. The diagnosis is straightforward in retrospect. Kylie Cosmetics was a social media hype machine at peak. The $600 million valuation was built on the assumption that hype converts reliably into repeat purchase behavior and sustainable brand loyalty. It does not. Not at that conversion rate, not with that consistency. By 2025, the brand was trending for the wrong reasons. Kris Jenner was publicly pushing back on reports that the brand was in trouble. An active rebrand was underway. The billion-dollar valuation that Coty had once believed in was now a cautionary tale about the distance between follower count and brand fundamentals. And then, before we even get to the winners, the second cautionary tale arrived. Skin by Kim, the strongest machine, the wrong product. Kim Kardashian's SKKN by Kim launched in 2022. It was discontinued in September 2025. 3 years. For context, Rhode built a billion-dollar brand in 3 years. Skin by Kim shut down in 3 years. The operational gap between those two outcomes is not a marketing gap. Kim Kardashian has more marketing infrastructure than almost any individual on the planet. The Kardashian-Jenner network, the PR machine, the media relationships, the social following, all of it was available and deployed for SKKN.
Into, and what I've always loved and what I really feel like my brand is taking...
The failure was not operational. It was identity. Kim Kardashian built a $4 billion empire with Skims. She understood shapewear at a deep, personal, apparently authentic level. The product came from her real experience of wanting specific things from bodywear that the market wasn't delivering. Skims worked because the founder's personal need and the product's positioning were genuinely aligned. Skin by Kim was a premium skincare line with 9 products starting at $42 each. It targeted the luxury skincare consumer. It had high-end packaging and a serious aesthetic. But the question nobody could answer without hesitation was, what is Kim Kardashian's specific, credible, authentic relationship with this particular product category? Not skincare broadly, skincare at this positioning, at this price point, with this formulation philosophy. The consumer couldn't answer it. And when the consumer can't answer the authenticity question instinctively, they don't buy at the rates required to sustain a premium beauty brand. A makeup relaunch in 2024 failed to reverse the trajectory. By September 2025, the brand was folded into Skims and effectively discontinued. Kim Kardashian, who built a $4 billion shapewear empire, could not make a beauty brand work. That is not a failure of the person.
I think my mission in launching Skin is just that
It is evidence of how specifically aligned a celebrity brand deal must be with the founder's authentic identity to generate sustainable commercial results. The most resourced person in this group, operating in the same industry at the same time, produced the worst outcome. Fame, infrastructure, and capital are not the variables. Something else is. Fenty Beauty, the gold standard with a warning sign. In 2017, Rihanna launched Fenty Beauty with 40 shades of foundation. The beauty industry had been effectively ignoring darker skin tones in their product ranges for decades, not out of explicit policy, but out of a default assumption about who the primary consumer was. Fenty Beauty launched with 40 shades, later expanded to 50, and immediately demonstrated that the market the industry had been ignoring was enormous, loyal, and underserved. The first month of sales reportedly hit $100 million. Within its first 15 months, Fenty Beauty generated $570 million in revenue.
A part of this, and that's really what was important for me within choosing the shades and how many we were going to make, especially with the foundation.
It changed the competitive landscape permanently. Every major beauty brand accelerated its shade range expansion after Fenty proved the financial case. The structural decision that made Fenty different from every other celebrity beauty brand at launch was the LVMH joint venture. Rihanna brought the brand identity, the cultural credibility, and a product insight that was genuinely correct about where the market was headed. LVMH brought manufacturing, global retail infrastructure, and the distribution relationships to place Fenty in Sephora stores across 35 countries simultaneously on launch day. That was not a lucky outcome. It was the result of a negotiated equity structure that gave Rihanna 50% ownership, while giving LVMH, the brand they wanted to attach to, the most commercially significant artist of her generation. At peak, Fenty Beauty was valued at approximately $2.8 billion. And then, October 2025 arrived. Reuters reported that LVMH is actively exploring the sale of its 50% stake in Fenty Beauty. Net sales in 2024 came in at $450 million, real revenue, but down from the peak trajectory the valuation was built on. Sales in North America were slowing particularly. The brand that had once been growing at a rate that justified a nearly $3 billion valuation was now growing at a rate that did not. LVMH does not exit winning positions. That sentence should be read slowly. The most sophisticated luxury conglomerate in the world, with a portfolio that includes Louis Vuitton, Dior, Moet & Hennessy, and Tiffany, has decided that its 50% stake in Fenty Beauty should be sold. When LVMH starts looking for the exit, that is not a rumour. That is a balance sheet decision. Fenty Beauty is not collapsing. It is plateauing. But in the beauty industry, a plateau at the scale Fenty was operating at has a valuation consequence. The $2.8 billion peak is almost certainly behind it. The current estimated range, according to analysts examining the exit scenario, sits between $1 and $2 billion. Rihanna revolutionized the industry. She made the definitive product move of the decade. She built a brand that genuinely changed how beauty companies think about inclusivity.
So there's a little bit of like, you can go in here in the crease and just get crazy, get precise.
And LVMH is still looking for the door. But the brand that ended up worth more than Fenty at its peak is the one nobody saw coming. Rhode, the smartest financial move in this story. Rhode launched in 2022. It was acquired in 2025 for $1 billion. It was 3 years old. On pure financial engineering terms, stripped of narrative, stripped of aesthetic, just the math, this is the best outcome on the entire scoreboard. Hailey Bieber built Rhode with a deliberate product restraint that most celebrity brand founders cannot bring themselves to exercise. She launched with 3 products. 3! The Barrier Restore Cream, the Peptide Glazing Fluid, and the Peptide Lip Treatment.
Talking you through every product I've tried from the brand, my favourite formulas, what I'd repurchase.
Every piece of distribution, every editorial mention, every piece of content pointed at the same 3 items. The result was a level of brand-product association that is almost impossible to achieve when you launch across 20 SKUs simultaneously. Rhode became the peptide lip treatment, the way Glossier became boy brow. The identity collapsed into the product so completely that the product became the brand. She built it direct to consumer, no Sephora split, no Ulta margin sharing. Every dollar of revenue came back to the brand at full margin, along with the customer data, purchase history, email addresses, repeat rates, that a DTC operation accumulates and a retail partner keeps. When ELF came with the $1 billion offer, they were not buying a product line. They were buying the customer database, the cultural association with a skincare aesthetic that had gone viral, and a brand infrastructure that had been built without the margin dilution of a retail partnership. The structure of the deal tells you exactly what ELF was paying for.
$600 million in cash, $200 million in stock, up to $200 million more in earnout, tied explicitly to Hailey Bieber's continued involvement with the brand.
That earnout clause is the institutional market pricing Hailey's personal involvement at up to $200 million.
With launching our next product, I really wanted to slow it down and take our time to make sure that it was truly ready.
That is what it costs ELF to keep her engaged with a brand she could, at that point, have walked away from, with $800 million guaranteed. Now compare that to Kylie Cosmetics. Kylie held on after Coty's acquisition. The brand lost value. The acquirer wrote down $200 million. Rihanna held on, and LVMH is looking for the exit. Hailey Bieber sold at 3 years old, at peak valuation, to a strategic buyer who would maximize the brand's retail distribution while preserving the identity that made it worth buying. She did not try to build the next Fenty. She identified the ceiling of what Rhode could be independently, found a buyer who could take it further than she could alone, and executed the cleanest celebrity beauty exit in the history of the category.
Hybrid gel serum that is the OG, glowy, beautiful, hydrating serum step.
From a pure financial perspective, that is the move. Not the flashiest outcome, the optimal one. Rare Beauty, why Selena Gomez beat everyone. Rare Beauty launched in September 2020. In October 2025, Fortune magazine revised its valuation to $2.7 billion. Selena Gomez joined the Bloomberg Billionaires Index. An IPO is being explored. She beat all of them. Not in brand recognition, not in launch hype, not in LVMH backing or Kardashian machine or ELF acquisition. On pure financial outcome, at the valuation level, Selena Gomez's beauty brand is worth more than any of the others.
It gives you this natural, sun-kissed warmth and doesn't fade.
The question that the scoreboard forces is, why? Selena Gomez is not the most globally famous person on this list. Her follow account is roughly comparable to Kylie's. She does not have Rihanna's cultural dominance. She does not have Kim Kardashian's business infrastructure. She was managing a lupus diagnosis, a kidney transplant, and a mental health journey that kept her out of public life for extended periods during the years she was building the brand. So why does Rare Beauty have a $2.7 billion valuation while Skin is shut down and Kylie's acquirer is writing off losses? The answer is authenticity at the product level, not as a marketing claim, but as a structural decision embedded in how the brand was built. Rare Beauty launched with a specific positioning. Make up for the skin you have, not the skin you wish you had. That was not a tagline designed in a branding meeting. It came directly from Selena Gomez's public and documented experience of living in a body that she did not always have full control over, and learning to work with it rather than against it. The Rare Impact Fund launched alongside the brand, committing 1% of all annual sales to mental health initiatives. That decision had a direct financial cost. 1% of sales is real money at Rare Beauty's revenue scale. But it created something that cannot be bought. The belief among consumers who share Selena Gomez's experience of mental health challenges that buying this product was an act of alignment with something they cared about.
Most of the base has been applied, and we did just a little bit of my eye, but...
The lupus diagnosis, the kidney transplant, the bipolar diagnosis she spoke about publicly, these were not marketing assets. They were the personal context that made her product positioning feel true rather than constructed. Selena Gomez tests every product personally. She was involved in formulation decisions, not just aesthetic approval. Consumers who followed the brand's development saw evidence repeatedly of founder involvement at the product level, not just the campaign level. And the result is a brand with a consumer loyalty premium that the follow account comparison does not predict and the fame ranking does not explain. $540 million in sales in 4 years, a $2.7 billion valuation, a billionaire founder. The person who went through the most difficult personal circumstances on this list built the most durable commercial outcome. That is not a coincidence. It is the variable the scoreboard is actually measuring. The pattern, what this industry actually rewards. Now that we have all 5 outcomes on the table, the pattern becomes visible. And it contradicts almost everything the conventional celebrity beauty narrative assumes. Map these 5 brands on 2 axes. Fame on one axis, authenticity on the other. Fame defined as global recognition, follower count, and cultural presence. Authenticity defined as the degree to which the consumer believes the founder's personal identity and the brand's product positioning occupy the same space without a gap between them. High fame, low authenticity. Skin by Kim. Kim Kardashian's global recognition is near the ceiling of this group. Her authentic connection to premium skincare at $42 per product.
Well, we are going to be rotating all of our product every few days, which I think is really fun.
Positioned at a consumer who trusts her specific credibility in that category, was near the floor. Outcome, closed after 3 years. High fame, high authenticity. Fenty Beauty in its growth phase, rare beauty throughout. Rihanna's personal experience of wanting inclusive beauty products was genuine. Her authenticity in the specific product claim was real. That's why Fenty exploded. Where Fenty has plateaued, where LVMH is looking for the exit, is partly a function of the brand reaching the ceiling of its original product insight without a second innovation layer that carries the same authentic weight. Rare Beauty stayed at high authenticity consistently because Selena Gomez's personal relationship to the brand's positioning did not diminish as the company scaled. The same person who launched it is still the primary creative force inside it. Focused authenticity over wide fame. Rhode. Hailey Bieber did not have Rihanna's cultural reach, but the specific product identity she built, glazed skin, minimalist skincare.
This, of course, is my Rhode lip treatment. Obsessed with this, take it with me everywhere.
The aesthetic precision of the peptide lip treatment was genuinely connected to her actual public identity and how she presented herself consistently over years before Rhode launched. The audience didn't need to be persuaded, they already believed it. Hype over authenticity. Kylie Cosmetics. Kylie had the largest initial engagement of anyone on this list when the lip kits launched. The hype was real. But hype is not the same as trust. And trust is what generates the repeat purchase rates that sustain a valuation past the initial acquisition. When the hype cycle completed, the foundation underneath it was not solid enough to justify what Coty had paid. The variable that predicts the financial outcome across all 5 brands is not fame. It is not follower count. It is not the size of the launch campaign, or the quality of the packaging, or the prestige of the retail partner. It is whether the consumer, without being told to believe it, looks at this celebrity and this product and thinks, yes, this makes sense. I believe she actually uses this. I believe this product is genuinely connected to who she is. When that belief is present, it converts into purchasing loyalty that compounds over time. When it is absent, when the consumer senses the gap between the persona and the product, it converts into a write-down and a discontinued brand. The founder involvement premium. There is one more variable in this story that the ELF acquisition made explicit. When ELF structured the Rhode deal, they included up to $200 million in earnout tied to Hailey Bieber's continued involvement with the brand post-acquisition. Read that sentence again. They paid a potential $200 million premium on top of the $800 million at closing to keep the founder engaged. That is an institution explicitly pricing the value of founder authenticity in a contract. Rihanna personally oversaw Fenty Beauty's shade range decisions.
LVMH reaching out to me and wanting to collaborate on a brand from scratch and be part of it.
The inclusive foundation story is credible because the person telling it was demonstrably involved in the product decisions that made it true. Selena Gomez tests every rare beauty product before it ships. That is documented and visible. It is not marketing, it is evidence. Hailey Bieber built Rhode around her specific skincare routine and was photographed using it consistently in the years before the brand launched. The product and the persona had years of authentic association before a single jar was sold. Kylie Jenner's involvement in Kylie Cosmetics post-Coty was primarily promotional. The founder relationship became a marketing function rather than a product development function. Consumers noticed, even if they couldn't articulate what they were noticing. Kim's involvement in SKKN was primarily aesthetic.
Better than all of the products that I've ever used I think it's really important.
The product decisions behind the formulations were not visibly connected to her personal expertise in that space. The brands where the founder stayed close to the product maintained authenticity. The brands where the founder transitioned to ambassador kept the fame but lost the credibility. ELF paying $200 million to keep Hailey Bieber involved is the market telling you in the clearest possible language what the data shows across all 5 brands. The founder involvement is not optional. It is the asset. And it is worth, in the explicit pricing of a corporate acquisition, up to $200 million. Final reflection. 5 brands, 1 industry, 5 very different financial outcomes. And the lesson, when you lay all 5 results next to each other, is not about beauty. It is about the gap between fame and trust. Fame gets you the launch. It gets you the press coverage, the sellout moment, the trending topic. It gets you the $600 million acquisition offer and the LVMH joint venture and the waitlist. Trust is what gets you the repeat purchase. The loyalty that doesn't require a new campaign every quarter. The consumer who recommends the product.
This is my favorite perfume. I've basically been wearing this my entire life.
To someone who doesn't follow the founder on social media. The compounding brand equity that turns a 3-year-old skincare line into a $1 billion acquisition and a 4-year-old makeup brand into a $2.7 billion valuation. Kylie Jenner had more Instagram followers than almost anyone alive when she launched. SKKN had the most developed celebrity business infrastructure of any brand in this group. Neither of them produced the outcome that 2 founders with more specific, more personal, more genuinely connected relationships to their products produced. Fame opens the door. Authenticity keeps the customer. And the customer, in the end, is the only number that matters. Selena Gomez understood that before she launched a single product, Hailey Bieber structured her entire brand around it.
Peptide glazing fluid is a really beautiful product that is a gel serum hybrid.
Rihanna understood it in 2017 with 40 foundation shades and has been searching for the second chapter of that insight since. The brands that won this scoreboard are the ones where the founder and the product were already the same thing before the marketing began. Everything else, the distribution deal, the retail partner, the acquisition offer, that just determines who gets to buy what they already built.